Mayuresh Joshi as well on the show with us. Mayuresh, hi, afternoon. What is it that you've been doing in the market? Any interesting buying opportunities or even profit taking, perhaps?
Afternoon, Aisha. No, I think we are being a little bit more selective as far as the broader markets are concerned. And therefore, stock additions are being picked very, very carefully. Having said that, Nesco is something that the team is liking at Marketsmithindia. Obviously, I think a lot of emphasis that we lay upon is how earnings are expected to grow, which is reflected through our EPS ratings. And a large part of the expectations in terms of Nesco's earnings should be relatively stable over the next few quarters and over the next couple of years as well. The added optionality, Aisha, that comes through for Nesco, considering their two core businesses, which is the Bombay Exhibition Center and their IT business parks, is the availability of space. So they've just utilized almost 20 odd % for both of these business segments. And as they start utilizing more, and as they explore the opportunities that come through the remainder of the 80% space by whatever means or options that are available to them, I think there is a huge amount of optionality that happens in a land-starved area like Mumbai. Yeah. The second aspect, obviously, the incubator and the food business has picked up quite meaningfully in terms of the EBIT performance. And therefore, I think the consolidated numbers should be stacked up relatively better over the next few quarters. They've got almost 1,500, 1,600 crores worth of cash onto their books. So they can also grow organically, or in fact, even have a larger amount of dividend payouts if these opportunities do not come by. And therefore, I think EPS ratings, RS rating, the institution holding, the parameters that we see in at Marketsmithindia as far as Cancelim are concerned are probably getting fulfilled. So yeah, Nesco is one interesting idea that we like at this stage.
And looking at the kind of traffic and the amount of interest that people had last week in one of the events, that definitely tells you that there's a lot of appetite for such large events. So Nesco is something on your radar, Mayuresh, but
that was in BKC.
Yeah, but that's what I'm saying. There is an appetite for large events. So Nesco is one of the candidates that
Nesco
can
has some events, is it?
Nesco has the
I don't know. I'm asking you. That's
yeah, Nesco has the space available to do all of these events. So
In
it's one
Bombay.
of it's one of those exhibition centers of sorts.
You
so
live and you learn.
It's at Goregaon. Yeah.
No, been there. I'm just asking
So
it
it
out
has
of
a
curiosity.
huge ground available wherein you can hold exhibitions like Bharat Maidan, which is there in Delhi. Not of course of that scale, but similar exhibition center in Mumbai. But since we are talking about the markets and what's really doing well, some of the Adani group of companies are doing well. So Adani Power, Adani Green, Adani Wilmar, Adani Transmission are some of the names. And then Jio Financial Services has perked up 7%. Nuresh, any stocks that you would recommend from the Adani pack? And what's the view on Jio Financial Services? Their AGM was there on Friday. They're talking about home loans being given out very soon. Maybe that has got the street excited for now.
Out of the Adani pack, Adani Wilmar looks interesting because it's gone through a sideways consolidation, classical of a bottoming out case, corrected from 850 all the way down to 350 odd levels, and now for the last 1 year has been sideways. Would have a clearer breakout above 400 odd levels. So for now, it's a risk reward trade with a strict stop loss below 360. Jio Finance, as of now, it's a one-day move. We've seen a slow drift. Closing about 340 for a couple of days would confirm a short-term reversal is in place, and it could go back to 370 to 400 slowly.
Okay, so that's the view coming in on some of these stocks. But yes, Jio Financial Services definitely doing quite well. Mayuresh, what's your view on power? So a lot of PSUs have come off. Power has managed to stay afloat. But if you look at the latest electricity data which has come out for the consumption of the month of August, it wasn't that great. There was actually a drop of almost 5%. And that's because of the rainfall and the seasonal issues as well. Would you book out your profits out of some of the out of some of the power names, or continue to stay invested?
Manisha, no, I think the high-flying names, specifically the power financing companies as an example, PFC, REC, yes, there is a huge amount of opportunity as far as the financing needs are concerned, because you are expected to see renewables probably expand 3 times from 180 gigawatts to almost 500 gigawatts, which is the set target by the government by 2032. And therefore, I think financing towards renewable projects, whether it's PFC, REC, IREDA, I think these companies are going to stay in focus. They've also got a decent amount of dividend yield supporting them. Asset quality pressures are largely behind them with the resolutions that have been done. And since they largely lend to government entities, I think the scope of default remains very, very minimal. However, I think the kind of run-up that we've probably seen in these stocks, some element of profit booking or partially booking some profits is not a bad idea. But overall, as a space, Anisha, I think our belief still lies with the fact that structurally, tailwinds still continue to favor power as a sector. And therefore, I think selectively, both generators, transmitters, as well as EPC players should continue to reap the benefit in terms of this structural tailwind. Obviously, how tariffs will play out is going to be extremely critical as renewables increase their share of pie within the overall basket. But I think it's going to be more a story as more capacities come in terms of operating leverage with better volume being played through with the generators and the transmitters as well. I think this space should remain in focus. So I think power financiers, some element of profit booking is not a bad idea. Some of the generators like a Tata Power or a CESC on declines is not a bad idea to accumulate as well. And you can also look at a few of these EPC players because these EPC players are probably going to benefit not just in terms of the incremental orders that can come through, but also in terms of the O&M contracts that can probably come through.
Right, okay, that's that on some of the power financiers. Look at NCC, NBCC as well. They've backed a couple of orders. NCC, in fact, a sizable quantum of about almost 1,200 odd crore rupees. That's looking smart. That's their August update. And NBCC has bagged a work order worth about almost 183 odd crore rupees. And the stocks have been doing pretty okay since. Mayuresh, how much more opportunity in the entire infra theme you think?
So, Aisha, again, I think we need to be a little bit more selective here. Yes, there are a lot of tailwinds coming through. The government is going with 11 lakh crore capex. Roads, railways, highways, ports are going to come at a humongous pace. We're looking at metros or metro lines coming in key metros as well. And therefore, infrastructure investments are going to be on an accelerated mode. At some point of time, private capex, which has shown signs of green shoot, should also start emerging. But I think one idea that we like at this juncture within this whole space is Pennar Industries. Our take is that the company which has embarked on an expansion plan, they just commissioned the plant a few weeks back. And our own take is the expectations in terms of numbers stacking up, both in terms of volumes picking up for the new plant and expectations in terms of both their Indian businesses as well as their US subsidiary. The ascent business in the US, Aisha, is just about gaining shape in terms of both orders as well as execution. And therefore, I think as these numbers start stacking up for both the domestic business as well as the US business, along with a very, very strong balance sheet that they possess, my own sense is that earnings should pick up quite meaningfully for a company like Pennar Industries. So I think being very selective here as well, but Pennar is something that we like at this time.
Industries, okay, that's an interesting one. Haven't talked about that one in a long time. We'll keep it on the radar from here on. But on the losing side, Jindal Stainless is coming under pressure. Granules, Indus Towers, Dixon Tech, Mankind Pharma, Vodafone Idea. Some of these names are on the back foot. Kunal, what's the view on Indus Towers as well as Dixon Tech? Both had a lot of tailwinds doing well for themselves. Is there some unwinding of sorts that we should watch out for now?
Yeah, for Dixon Tech, it seems like it's an unwinding because, the volumes on Friday was pretty much on the higher side. But the follow-through move on, for the stock is on the downside, and the stock is now on the verge of breaking below its 50 DMA. So what we've seen in the last 3-4 days, or rather, previous week for Dixon Tech was a very mild retracement. Today is where you've seen the pace of correction intensifying. That could, I think, probably be one of the key reasons why you may probably expect the stock to get into a further leg of correction. And throughout the day, we've not seen any major fight back into the stock price or any kind of a recovery into the stock, and that's one of the major reasons why it could probably drag a bit more further. Now, in terms of the first level of supports for Dixon Tech, the support which the stock tested in the month of July and the start of August was around the 11,000 mark, 11,200 almost. So I think that's the first leg of support which the stock could retest in this leg of correction. And for Indus Star, it's the first ever correction. The stock has formed a bearish engulfing pattern, but my sense is that potentially over the next 1 or 2 days, in case if the stock corrects a bit more, say comes back to 420, 425 mark, that could actually be a good contra buying territory.
I want to Check in on what the OMCs as well are up to. Remember, over the weekend, IOC had hiked the commercial LPG prices by good 39 rupees per cylinder, and you had OMCs all hold up HP, BP, IOC to the tune of about 2 to 4 odd%, at least this morning. Most of them have fizzled out from there. Mayuresh, where within the oil and gas pack are you finding opportunities, if at all?
So very interesting space, Aisha. And again, I think the expectations of upstream companies are actually holding up their fort might actually be a base case scenario. Obviously, you've seen Brent crude prices come off, both in terms of what the OPEC output estimates are expected to be and lower demand, specifically from China and the rest of the globe, at least for the first half of this calendar year. Having said that, the expectations, if crude prices stay the way they are, and improvement in terms of demand at a local scale, what we're probably expecting to see is operating leverage getting played out, because as prices stabilize and large part of the volumes start coming through, specifically in the domestic context, you will see some element in terms of stability. One aspect is that the GRMs have come off quite significantly. So I think the refining margins for OMCs are obviously going to be under some sort of pressure as we speak. And OMCs do not have that many optionalities like a Reliance probably has. And therefore, I think refining might come under pressure while marketing might probably hold out OMCs. So there might be some element in terms of volatility of earnings as far as downstream is concerned. Again, petchem with petchem products and pricing being on the weaker side with weaker deltas as well. I think the petchem side of the business might also remain a little bit subdued. Midstream companies might be on a better track, Aisha, with expectations of transmission volumes holding up and their absolute EBITDA holding up as well. So at this juncture, again, I think upstream like ONGC with the dividend yield, Oil India have really done well. So anybody holding on can definitely hold on. Midstream companies probably can be coming back in focus. So I think you should probably keep that on your watch list. Companies like a GAIL or even a Petronet.
Okay, that's GAIL, Oil India. That's what Mayuresh is liking right now. Kunal, where do you see both gas as well as oil and gas companies, or rather OMCs headed? I mean, HP, BP, IOC the strongest of the lot today. And that breakout on Gujarat Gas today, purely for different reasons, that of merging some of its companies into itself.
Yeah, so I think Gujarat Gas, IGL, and I think MGL, these three names, these stocks have been very iffy in terms of price trends, because, there have been periodic breakouts for the stock price, but immediately post the breakout news flow for the stock, you've seen these stocks going to actually a corrective phase. So which means that the trend is not stable for these stocks. And that's why I would probably believe that this kind of a momentum or a sudden surge which you've gotten to the stock for, say, like the likes of Gujarat Gas, I think one should not venture into the stock because of this erratic nature or behavior of the stock price trends. And I think the best strategy over here is to try and wait for these stocks to get back into a corrective phase. Say if it happens in the next 1 or 2 weeks, and Gujarat Gas, assumingly if it comes back to say 620, 630 mark, filling the gap which has been created today, that could be a good territory to try and buy the stocks. From the OMC space, I think it's very difficult to pinpoint just one stock which has been very strong, but all three of them, they've shown synchronized up move. The recent breakout which happened for example, for IOC, when the stock managed to cross over levels of 160, 165. BPCL, that stock has looked very attractive the moment the stock had broken past about 335, 350 kind of a major resistance band. And volumes have been very strong on these stocks. So I think what matters over here is that on the way up, when these stocks get into those breakout modes, when volumes are pretty much on the higher side, traders, they tend to like these kind of patterns, and that's where trends originate. So would be bullish on OMCs even from current levels, and I would believe that potentially this space could see another 5 to 7% upside at least over the short term.
Okay, that's the take coming in on oil and gas space. In the meantime, some of the other buzzers in trade. Let's also check in on IT, the big mover from all through last week. Mayuresh, are you seeing any opportunities for a longer term investment in IT, although the index is already at a life high?
No, so I think most aspects are getting priced in, Aisha. So if you speak about expectations of order wins expected to come through on a steady state basis as we head into the second half of the financial year, that is one possibility that the street probably believes should come through as the rate cut cycle begins in the US. The second aspect, obviously, is the key sectors and segments that our outsourcing companies serve. BFSI, retail, manufacturing should show signs of green shoots as well. along with some element of recovery that we are seeing in the European markets as well. So I think the key markets and key sectors should start holding out for IT companies. Now, does that translate into significant orders, specifically for large cap companies and consistent order flows going well into the second half as we speak, and again, the next year as well? I think that remains to be a plausible opportunity that comes through, specifically in areas like cloud computing, AI, and within AI, generative AI, which has become the big, strong buzzword. So I think large IT companies should see some element of progress coming through, but that is getting penciled in. Similarly, for mid-cap IT companies, the order flows have been very, very consistent. A lot of management commentaries have pointed out that order flows will continue coming at a good pace, and therefore, I think the constant currency revenue growth should continue at a decent pace as well. Assuming and excluding the kind of wage hikes or salary hikes and outsourcing costs which had shot up, and there will be adjustments in the next 2 quarters for most IT companies. EBIT margins are expected to remain far more stable as we speak. But even within the mid-cap IT, ER&D companies, example, KT IT, so have moved up quite significantly. The latest also being Tata LXI, which has moved significantly in the last couple of weeks. And a few of the other outsourcers within the mid-cap IT space are where they're trading both in terms of late-stage basis as we see and elevated valuation. So I think it's a hold rating at our end. We continue holding stocks like an emphasis, LTI, Mindtree into our global portfolios. But as a clear disclaimer, we've entered these stocks at far lower levels.
Okay. Naresh, we've been chatting about some of the breakouts in IT all through last week as well. Any trading opportunities now?
So Coforge is one which has given a fresh breakout in the last couple of sessions. That looks interesting. And the stock is very, very close to the previous all-time highs. So that could take lead. HCL Tech remains a favorite on dips going forward. And apart from that, one could look at Infosys on dips because that's another stock which hit a new time high. But at current levels, the risk reward would not be great. So on dips, Infosys and HCL Tech, and at current levels, it would be Coforge.
Right. Autos, that's where the focus is. As the monthly sales data is trickling in, you're seeing those stocks react. Although Bajaj Auto seems to be the winner of the lot, and so does Hero MotoCorp. For Bajaj Auto, the two-wheeler sales have seen an uptick of about 18%. The domestic sales have been higher by 40% on a year-on-year basis. And the overall two-wheeler as well as CV volumes have seen an uptick of about 16%. I don't know if we can bring up the scorecard or not, because for Tata Motors, the commercial vehicle has been a bit of a dampener. It's been in line for Maruti. So that's really been the status check so far when it comes to autos. Mayuresh, just wanted to understand what is your own sense. There you go. That's really the scorecard so far when it comes to the sales numbers. But Mayuresh, where is it that you still find value on the table from autos? Because they've had a really great run so far.
Absolutely. No two ways about it, Aisha. And again, two-wheelers have been ruling the roost. And you're absolutely right. I think numbers from Bajaj Auto, TVS Motors, both in terms of volumes and the demand for the new launches have really stuck well in terms of not just volumes playing out nicely for them, but again, I think numbers playing out meaningfully as well. So I think two-wheelers, if somebody is holding, can continue holding. Within the four-wheelers, again, M&M show was relatively better. And therefore, I think our take is anybody holding on a stock like an MMM, Tata Motors, they've continued doing well. But one actionable idea within the passenger vehicles might be Maruti on declines. Because our take is that the management is sounding very, very hopeful in terms of new launches, the expectations of regaining market share, the deepening of their after-sales service network. And obviously, I think the premium launches that are happening through their Nexa outlets as well. So more outlets expected, expectations in terms of more product pipelines, maybe more in terms of the EV portfolio, hybrid portfolio in the near future as well. So I think Maruti becomes one actionable idea within the passenger vehicle segment. And at some point, in my opinion, Aisha, I think even the commercial vehicle segment should show signs of recovery. Second half, I think the numbers should start building up for the commercial market as well. And therefore, I think commercial players should be kept on your focus as we head into the second half. But I think opportunities for commercial vehicles will come into the second half. So I think the only actionable idea that we find plausible at this juncture might be Maruti on declines.
Ashesha as well joins in to sum up how the Motown sales have been so far. Ashesha?
Haven't seen any firecrackers this time around as far as auto sales numbers are concerned. First up, let's talk about passenger vehicle segment, which reported a decline for the second consecutive month in the month of August. One, of course, was on account of higher base, and apart from that, car makers are also reducing their inventory, and that also impacted passenger vehicle numbers this time around. So Tata Motors reported a decline of about 3% YOY, Maruti Suzuki down 4%, and M&M meanwhile reported an uptick of about 9% on a year-on-year basis. As far as commercial vehicle sales are concerned, that also were disappointing. So Eicher Motors VECV numbers were flat, Ashok Leyland down 7%, Tata Motors commercial vehicle segment also reported a decline of about 15% on a year-on-year basis. Meanwhile, tractor sales were also on the weaker side. So for instance, M&M tractor sales declined 14% on a month-on-month basis, and Escorts also declined by about 3%. As far as two-wheeler sales are concerned, that was the only saving grace, and it reported strong set of numbers from across the board. Eicher Motors RE was the only one which reported a decline of about 5% on a year-on-year basis. So all in all, it was a weaker set of numbers that came in from automakers this time around. All eyes will be on the upcoming festive season, and car makers are very bullish with respect to revival in demand in the coming quarter.
Right, okay. In fact, let's begin winding up for the day as well. It's been a quiet close at an index level, absolutely flat. And the broader markets, a smidge actually favoring the reds. That's how we're closing in for the day. Let's get in more color on how the closing trades have panned out. And I'm going to hand it over to Snehi for that. Before that, Kunal, Naresh, Mayuresh, all of you, thanks as always for joining in.
If you like this video, then like, share and subscribe to ET Now.